Have you ever wondered how to potentially double your investment in just 1 year? This question has undoubtedly crossed the minds of many, sparking a curiosity that begs for exploration. It's a fascinating concept, isn't it? A prospect that has the power to captivate your imagination and stimulate your senses with the allure of financial growth. Today, we're going to delve deep into the captivating world of high-risk investment strategies. We're not just skimming the surface here. We're talking about plunging into a realm that is often veiled in mystery and misconceptions. A realm that, although intimidating, promises the tantalizing potential of significant returns. These are the investment opportunities that create a spark, a tiny glimmer of hope in the eyes of the investors. They are the daring ventures that encourage you to step outside of your comfort zone and embrace the unknown. They are the opportunities that may seem frightening at first, but with careful analysis and due diligence, could turn your financial world upside down. However, it's important to remember that reward often comes high risk. It's a balance, a dance on the tightrope of financial management. It's about making choices and taking chances. It's about understanding the market trends, interpreting financial forecasts, and navigating through the chaotic yet thrilling world of finance. As we immerse ourselves in this discussion, we'll analyze the various factors that contribute to high-risk investment strategies. We'll explore the role of market volatility, the influence of global economic factors, and the impact of personal financial circumstances. We'll decode the language of finance, breaking down complex terms and concepts into bite-sized, easy-to-understand information. Furthermore, we'll examine the importance of conducting thorough research before diving into high-risk investments. We'll emphasize the significance of understanding the potential consequences, the possible gains, and the inherent risks associated with such strategies. We'll guide you through the process of due diligence, showing you how to gather and interpret vital asset risks and make informed decisions. Remember, every investment strategy has its pros and cons, and what works for one person may not work for another. It's important to remember that investment is not a one-size-fits-all situation. Each individual's financial circumstances, goals, and risk tolerance vary, and these variations can significantly impact the success or failure of an investment strategy. In this journey of exploration, we'll walk alongside you, guiding you through the twists and turns of high-risk investment strategies, shedding light on the dark corners of finance, and empowering you to take control of your financial future. Let's brace ourselves for an exciting journey into the world of high-risk investment strategies. It's going to be a thrilling ride, filled with ups and downs, victories and setbacks, but one that promises the exhilarating prospect of significant returns. Without further ado, let's dive into the first strategy. Scene script. Strategy number 1, the classic, stock market investments. As we embark on this journey through the labyrinth of investment strategies, we find ourselves drawn towards the fascinating dynamism of the stock market. This high-energy arena, pulsating with potential, stands as a beacon of hope and opportunity for potential investors, calling out to those seeking to multiply their fortunes. The allure of the stock market is irresistible, not least due to its potential for high returns. This particular strategy has the ability to dramatically transform the fortunes of even the smallest investors, giving them a fighting chance in the ruthless world of finance. However, as with all high-reward ventures, the potential for increased returns is accompanied by a proportionately high level of risk. Our journey begins with an exploration of growth stocks. These represent shares in companies that are predicted to expand at a rate that surpasses the average growth rate of their market counterparts. However, as with all things in life, there's a catch. These stocks are notorious for not dispersing dividends. The reason? The companies in question choose to reinvest their profits in order to expedite growth in the short term. As an investor, you're betting on the success of the company to raise the value shares. Next, we delve into the adrenaline-fueled world of trading. This isn't a strategy for the faint-hearted or risk-averse. It involves the frequent buying and selling of stocks, often within the same day, in a bid to capitalize on minute price fluctuations. This high-risk, high-reward approach calls for a razor-sharp understanding of market trends, swift decision-making capabilities, and a certain audacity. Both growth stocks and trading present the enticing possibility of doubling your investment within a single year. That being said, they require diligent research, a deep and nuanced comprehension of market trends and patterns, as well as an appetite for risk. So when considering whether to invest in growth stocks or engage in trading, take the time to truly understand what each entails. Seek the counsel of financial advisors, delve into the study of market trends, and always remember the golden rule of investing: never stake more than you're willing to lose. As we conclude this exploration of stock market investments, remember that success hinges on making the right choices at the right time. The journey may be fraught with risks and uncertainties, but with careful planning and strategic decision-making, the potential for growth is limitless. Remember, it's all about the right choices at the right time. Next up, we have the digital gold of this era, cryptocurrency. This cyber cash, this contemporary form of gold, has been making waves in the financial world for quite a while. It's been the topic of conversation among investors, entrepreneurs, and tech enthusiasts alike. Cryptocurrency, this new age money, has carved a niche for itself in the vast world of finance. But what makes it so intriguing, so captivating? Well, the answer lies in its high volatility but high potential returns. Envision as a virtual or digital currency that employs cryptography for security. It's like an enigmatic code, understandable only to those who know the secret language. It's decentralized, meaning it isn't controlled or regulated by any government or central authority. Instead, it operates on a groundbreaking technology called blockchain. This technology is essentially a distributed ledger, a kind of a public database that is enforced and maintained by a network of computers, commonly referred to as nodes. These nodes validate and record transactions, thereby creating a transparent and tamper-proof system. The decentralized nature and the transparency that blockchain provides is what sets cryptocurrency apart from traditional forms of investments, such as stocks or bonds. It's a different beast altogether, one that has its own unique set of rules and characteristics. The primary characteristic that separates cryptocurrency from other investments is its infamous volatility. Prices can skyrocket one day and plummet the next. This volatility, as nerve-wracking as it may be, can lead to high potential returns. It can turn a modest investment into a fortune overnight, but it also comes with significant risks. It's like a wild ride on a roller coaster, full of thrilling highs and terrifying lows. The unpredictability can be exhilarating for some, but it can also be nerve-wracking for others. Among the most popular cryptocurrencies, we have Bitcoin, Ethereum, and Litecoin. Each one has its unique characteristics and potential for growth. Bitcoin, for instance, has seen extraordinary increases in value since its inception. It has outperformed traditional investments and has created a new class of millionaires. But it's also experienced dramatic drops, causing significant financial losses for those who bet big on its continued rise. Investing in cryptocurrency requires a strong stomach for risk and a deep understanding of the market. It's not an investment for those who can't handle volatility or for those who are risk-averse. It's not for the faint-hearted, but for those who have the courage to weather the storm. The potential rewards can be substantial. However, always remember that with high rewards come high risks. It's crucial to thoroughly research and understand the market before jumping into the crypto world. Understand its volatility, comprehend its risk, and consider your financial situation before investing. Crypto can be a roller coaster ride, so buckle up. The third strategy we have is peer-to-peer lending. This novel form of lending is essentially a way of allowing investors to play the role of a bank. You get to make crucial decisions, like whom to lend your money to and on what terms. This is the power and potential of peer-to-peer lending. One might wonder how peer-to-peer lending came into existence. The roots of this strategy lie in the digital revolution. As our society became digitized, innovative platforms emerged, seeking to unite lenders and borrowers in a direct and straightforward way. These platforms aim to eliminate the need for traditional financial institutions to mediate transactions, instead fostering a direct relationship between the lender and the borrower. This direct approach has the potential to drastically reduce the barriers to entry for both parties, creating a more open and accessible lending environment. The lenders in this scenario don't necessarily have to be financial institutions. Really, anyone with a bit of spare cash can become a lender. This opens up a sea of opportunities for individuals who are eager to get more out of their money. With peer-to-peer lending, there's the potential to earn significantly higher returns than one would typically receive from a traditional savings account or certificate of deposit. However, such high potential for returns does not come without its fair share of risks. Peer-to-peer lending involves a higher risk of default compared to traditional loans. There are several reasons for this, one of them being that borrowers who turn to peer-to-peer lending often do so because mainstream financial institutions have turned them down due to their perceived riskiness. Additionally, in contrast to traditional banking systems, there's no Federal Deposit Insurance Corporation insurance to protect your investment in case of a default. However, the risks associated with peer-to-peer lending can be mitigated to a certain degree. Diversifying your investments across multiple loans can help manage and distribute this risk more evenly. Moreover, some platforms offer provision funds, which can compensate lenders in the event of a borrower's default. This provides an added layer of security to those who choose to lend their money via peer-to-peer lending. In conclusion, peer-to-peer lending is not a strategy for those who shy away from risk. It requires a certain level of boldness and a willingness to take chances. However, for those who are not afraid to step outside their comfort zone, it can be an immensely satisfying and lucrative investment strategy. This is a direct way to fund someone's dream and potentially make a profit. Are you ready for the fourth strategy? It's real estate flipping. This particular strategy isn't just any arbitrary gamble. It's a calculated risk that, when executed correctly, can lead to substantial financial gains. It's an adventurous journey into the realm of real estate, where foresight, business acumen, and artistic flair converge. One could even say it's like a daring dance, whirling and twirling between investment and renovation, which if mastered can create a lucrative symphony of profits. Real estate flipping in its most simplified definition is about reviving the fading charm of properties that have seen better days, giving them a fresh lease of life through meticulous renovation and selling them off at a profit. It's about injecting these weathered and worn-out properties with novel possibilities and potential, with the goal of breathing vibrancy and value back into every corner, nook and cranny. The secret to success in this flipping game is primarily in the acquisition. The initial property purchase is the cornerstone of this venture. You need to meticulously scout for a property that's priced just right, low enough to accommodate the inevitable renovation costs, and still leave sufficient margin for profitable resale. This is where your detective-like research skills, your knack for unearthing hidden gems in unlikely places, and your impressive negotiation abilities are put to the test. It's akin to treasure hunting, where the treasure is a property with plenty of scopes for value addition. Once you have that perfect property in your possession, the next stage is all about transformation. It's time to roll up your sleeves, put on your creative thinking cap, and delve into the fascinating world of renovation. You'll need to turn the property inside out, scrutinize every aspect, and strategically plan your renovations. With careful budgeting and tasteful creativity, you aim to enhance the property's appeal without shattering your bank account. It's an intricate balancing act involving aesthetics, practicality, and finances, requiring a keen eye for detail and a judicious use of resources. The final act in this flipping drama is the sale. Selling the property is where your marketing expertise and persuasive communication skills take center stage. You need to highlight and showcase the property's best features, narrate its transformation story, and convey its newfound charm and potential to prospective buyers. This necessitates an understanding of the market, knowledge of buyer preferences, and skill in positioning the property in the most attractive light. The aim is to find a buyer who sees the merit in your hard work, appreciates the value you've added, and is willing to pay your desired price. A well-flipped property is not just about financial gains, it's about the satisfaction of seeing a worn-out property transformed into a desirable dwelling, of witnessing your vision come to life. It's about the thrill of the deal, the joy of the journey, and the pride in your achievement. A well-flipped property can indeed flip your investment. Remember, are you ready for the fourth strategy? It's real estate flipping. A well-flipped property can indeed flip your investment. Strategy number 5 is all about high-yield bonds. If you're unfamiliar with the term, let's break it down. Bonds, as you might know, are fixed income instruments that large entities like corporations and governments use to raise capital. These instruments are often seen as a safer bet compared to stocks, as they promise fixed to their holders. High-yield bonds, however, are a different breed altogether. The high-yield tag is not merely a catchy marketing phrase. It signifies a substantial truth. These bonds pay out higher interest rates than most other bonds available in the market. This increased yield can make them extremely enticing for a lot of investors, especially those who are not averse to taking on more prominent risks in the pursuit of higher returns. Now, what makes these bonds so intriguing? It's their higher interest rates, a sweet enticement for those willing to take on a bit more risk. This aspect is what often draws in investors from all walks of life, from the seasoned trader looking to diversify their portfolio to the ambitious newcomer hoping to make a significant return on their initial investment. But why do these bonds offer higher interest rates, you may ask? Well, it's quite simple. Companies or governments that issue high-yield bonds usually have a lower credit rating, making them a riskier bet. This riskier venture is precisely what necessitates the increased interest rates. It's a way for the issuers to compensate for the heightened risk they're asking investors to undertake. These issuers offer higher interest rates as a way to attract investors despite the increased risk. It's a strategic move to ensure that their bonds will find buyers in the market, and they raise the necessary capital to fund their operations or projects. Now, if all goes well, this risk can translate to a substantial return on your investment. The prospect of a larger payout can be thrilling, and the rewards can indeed be significant. However, there's a pretty noticeable caveat here. However, it's crucial to remember that the road to high returns is often paved with high risk. It's like walking a tightrope. The thrill is exhilarating, but a single misstep could lead to a significant fall. So it's essential to approach high-yield bonds with a healthy dose of caution. So before diving into the world of high yield, make sure you're ready to swim with the sharks. It's not a pool for the faint-hearted. One needs to be adequately prepared, both mentally and financially, for the potential turbulence that might come their way. High-yield bonds, risky but potentially rewarding. It is an investment journey that promises a thrilling ride, packed with both opportunities and challenges. Just remember, as long as you understand the risks and are prepared to manage them, high-yield bonds can be an exciting addition to your investment portfolio. Transitioning now to our sixth key strategy, which is the compelling world of small business investment. This innovative and exciting investment strategy encompasses the act of contributing financial resources into inventive startups or burgeoning small businesses. This is typically achieved through two main routes, each with its own distinctive characteristics, namely angel investing or the increasingly popular crowdfunding ventures. Delving first into the realm of angel investing, it is fundamentally about providing much-needed financial backing to promising startups. These are startups that are in their infancy, rich with potential and ripe for growth. The goal is to exchange monetary support for ownership equity or an arrangement involving convertible debt. This essentially means that you, as an investor, will have a stake in the company, a voice in its direction, and a share in its future successes. It's an opportunity to align yourself with a burgeoning company, supporting its growth and potentially reaping substantial rewards in line with its success. However, this method is not without its unique set of challenges. Investing in startups can be a high-risk venture as a significant percentage of new businesses unfortunately do not survive the often brutal business landscape. Nevertheless, those that do succeed can provide investors with impressive returns, substantiating the risk for many. On the other hand, we have crowdfunding, a more recent phenomenon in the investment sphere. Crowdfunding primarily involves capital through a collective effort. This group effort can involve anyone from friends and family to enthusiastic customers and individual investors who believe in the potential of a particular business. This method democratizes investment, allowing anyone to contribute to a business they consider worthwhile, irrespective of their financial standing. Crowdfunding, while less risky than angel investing, may not offer the same level of possible returns due to the distributed nature of the investment. However, it presents a valuable opportunity to invest in the growth of a business with a lower threshold for entry and less personal financial risk. Both angel investing and crowdfunding come with their own unique sets of risks and rewards. However, they can both form viable strategies under the right circumstances. Making a successful investment either domain requires a combination of thorough research, a deep understanding of the market, and a genuine belief in the product or service the business offers. These components, when aligned, can lead to a successful investment that yields significant returns. To conclude, investing in a startup could be your stepping stone to doubling your investment. It is a thrilling and potentially rewarding venture that enables you to contribute to the growth of a promising business. while possibly seeing significant financial gain in return. Always remember, every investment is a risk, but with the right knowledge and strategy, it can become an opportunity. The 7th strategy on our list is commodities trading. This is an intriguing and multifaceted form of trading that is as old as civilization itself. It may appear complex to the uninitiated, but it's actually based on simple principles. Commodities are nothing more than basic goods that can be interchanged with goods of the same type. They are the building blocks of the global economy, the raw materials that are transformed into the products we use every day. These include precious metals like gold, energy sources such as oil, agricultural products like coffee and wheat, and many more. These examples represent the 4 main categories of commodities: metals, energy, agriculture, and livestock. Each category has its own set of rules and its own unique dynamics. The nature of these commodities is such that they are universally desired, and as a result, commodities hold a unique position in the global economy. Their value transcends national boundaries and economies, and for this reason, they are often referred to as the lifeblood of the global economy. Trading commodities, then, is essentially a game of prediction. The goal is to anticipate fluctuations in the value of these commodities and to buy or sell them accordingly. Given this, the successful commodity trader needs a broad understanding of global markets and the various forces that shape them. They must be able to discern patterns and trends in the movement of commodity prices and react quickly to these changes. Environmental factors such as weather can have a major impact on the supply and demand of commodities, especially agricultural ones. For instance, a good year for wheat can lead to an oversupply, causing prices to plummet. At the same time, sudden weather changes can drastically reduce crop, leading to a spike in prices. Political instability, especially in regions rich in commodities, can also greatly affect their prices. A prime example of this is the volatility of oil prices, which are often subject to the political climate in oil-producing regions. So, political instability in these regions can cause oil prices to skyrocket. Despite the volatility, commodity trading can also be a potentially profitable endeavor. Like all forms of trading, it's not without risk. However, with careful analysis, sound decision-making, and a bit of luck, you can make significant gains. It's essential, though, to always remember to never invest more than you can afford to lose. Diving into the world of commodities trading can be a thrilling ride, but it's not a game for the faint-hearted. It requires a cool head, a sharp mind, and an unwavering commitment. Commodities, a golden opportunity if played right. 8th on the list, we have foreign exchange trading, or Forex. Dipping our toes into the world of finance, we find ourselves faced with a rather intriguing player whose name echoes through the halls of Wall Street, the banks of the Thames, and the gleaming skyscrapers of Tokyo. The name is familiar: Forex, a fascinating domain that deals in the trading of currencies against each other. Not mere child's play, Forex is a heavyweight contender in the trading domain, boasting the title of being the largest and most liquid market on our blue planet. Visualize for a moment a bustling global bazaar. A whirlwind of sights and sounds filled with a kaleidoscope of colors and the rhythmic banter of bargaining. But within this bazaar, instead of the intoxicating aroma of spices or the vibrant array of textiles, it's teeming with a different kind of commodity. Currencies from every corner of the world, changing hands in a dance that never ceases. This is the enticing and intricate world of Forex. A vital part of this world is the concept of leverage. A somewhat mysterious term, leverage in essence grants you the power to control large amounts of money using very little of your own. Think of it as a financial multiplier, capable of magnifying your earnings significantly. Yes, the lure of high returns is certainly tempting, the glint of profit catching the eye of many a trader. However, as the old adage goes, with great power comes great responsibility. In the world of Forex, high leverage is a double-edged sword, for it also signifies a higher level of risk. The possibility of significant gains is always shadowed by the chance of equally significant losses. Therefore, navigating this vast, swirling ocean of currencies is no easy task, and requires a keen eye and a sharp mind. So, you may ask, does one sail these turbulent financial waters? The answer lies in learning the ropes, understanding the ever-changing trends of the market, the ebb and flow of the currency tides. It lies in managing risks wisely, balancing on the thin line between caution and ambition. To truly master Forex, you'll need a good dose of patience, to wait for the right moment to strike, a pinch of discipline to control the urge to dive headfirst into risky ventures, and a generous dash of strategy to plan your moves and outwit the market. In the end, it's all a game of numbers and timing, a game that, with the right tools and mindset, can open up a world of opportunities. With every currency, a new story waiting to be told, a new adventure waiting to unfold. And there you have it, Forex, a world of currencies waiting to be explored. Ninth up, we have options trading. Let's explore this world that is as exciting as it is dangerous. We are to embark on a journey, delving into a strategy that can be simultaneously compared to both a treasure trove and a perilous trap. It's a strategy that's laden with potential rewards when handled with skill and finesse, but also fraught with risks if mishandled or approached with a lack of knowledge. Welcome to the fascinating domain of options trading. The first thing to understand about options trading is this: it is fundamentally a game of prediction, a calculated gamble hinging on your ability to foresee the future. Imagine being able to predict the movement of the wind or the path of a falling leaf. That's the level of prediction we're talking about here. The key difference: you're not predicting the weather, but the movements of the market, which can be just as unpredictable and capricious. At its core, options trading is a contract. This contract, quite uniquely, provides the buyer with the right, but critically not the obligation, to buy or sell a security predetermined price on or before a certain date. Now, here's where the plot thickens and the game gets more interesting. If your prediction about the market movement turns out to be correct, you should be ready to embrace potentially high returns. For illustration, consider this scenario. You predict that the price of a particular stock will rise. To capitalize on this prediction, you can what is known as a call option. If the stock price indeed elevates as you had predicted, you can exercise your option. This means you have the right to buy that stock at the lower price stated in your contract. Afterward, you can then sell it at the current higher market, thereby making a profit. But it's not all smooth sailing. The market, much like the vast and unpredictable ocean, can turn turbulent in a blink. Sometimes, your predictions may not follow the course you charted. This is where the risk element comes in. If your predictions go awry, you could be looking at losing your entire investment. This emphasizes the critical importance of careful forecasting, rigorous preparation, and calculated risk-taking in options trading. However, the beauty of options trading is that it's not just for the brave or risk-loving. It also thrives on strategy, analysis, and the ability to make informed decisions based on various factors. It's not just about taking risks, it's about understanding them and knowing how to manage them effectively. It's about leveraging knowledge and insight to navigate the treacherous waters of the market. Ultimately, options trading is a high-stakes game. It's a risky, but when approached with the right tools, mindset, and strategy, it can pay off handsomely. Options trading, a risky option that can pay off. And finally, the 10th strategy, day trading. This is an exhilarating endeavor, a high-stakes game where every fleeting second is precious and carries immense weight. It is an intricate dance that takes place in the grand ballroom of the global financial markets, captivating and intense. The name day trading itself encapsulates the essence of this financial strategy. It is the technique of buying and selling financial instruments like stocks, currencies, futures, or commodities within a single trading day. The entire game begins and ends with the rising and setting of the sun every single day. In the realm of day trading, the primary objective is to leverage small price fluctuations to create a profitable portfolio before the day concludes. The goal might seem simple, but it is within the execution that the real challenge lies. Every price movement, whether up or down, represents an opportunity to be seized or a risk to be mitigated. It's a game of razor-thin margins, one that demands the sharpest of minds and the quickest of reflexes. Day trading is not a leisurely stroll in the park, nor is it a reckless gamble. It requires a sharp, keen eye for detail, an ability to discern patterns where others see chaos. It calls for a solid understanding of market trends, driven by a relentless curiosity to decode the secrets of the financial world. And above all, it demands discipline, the kind forged in the fires of persistence and hard work. In the world of day trading, hesitation can mean the difference between a profitable and a considerable loss. It is a game of quick decisions, a rapid-fire sequence of buying and selling, where a moment's delay can turn potential profits into significant losses. But it's not all doom and gloom. Far from it. With the right skills, the right mindset, and a dash of day trading can prove to be a lucrative endeavor. It's a virtual landscape brimming with potential for significant profits. But one must remember, it also carries the risk of substantial losses. The scales of profit and loss are precariously balanced, and it takes a skilled hand to steer clear of pitfalls. Day trading is a journey, one that requires patience, perseverance, and a healthy dose of courage. It is a test of one's mettle, a path that can lead to towering peaks of success or challenging troughs of lessons learned. It's a thrilling roller coaster ride, not for the faint-hearted but profitable. It is a world where the bold thrive, where calculation meets intuition and foresight meets action. Day trading, not for the faint-hearted but potentially profitable. And there you have it, 10 strategies to potentially double your investment in just 1 year. We've taken an enlightening journey into the enthralling world of investment, from the basic principles to the more intricate methodologies. From diving headfirst into the unpredictable yet potentially profitable waters of the stock market and digital currencies, to delving into the fascinating realm of peer-to-peer lending and real estate flipping, we've navigated a broad spectrum of financial ventures together. Each of these strategies carries its own unique set of risks, benefits, and potential pitfalls. It is crucial to thoroughly understand them before you embark on your investment journey. Consider the allure of high-yield bonds. These investment vehicles, with their elevated interest rates, seductively lure you with the possibility of significant returns. They represent a fascinating avenue of potential revenue, but like all financial adventures, they come with their own distinct caveats. Or perhaps the exhilarating world of small business investment may pique your interest, where you could play an instrumental role in a fledgling startup success story. It's here where your investment could breathe life into innovative ideas, transforming them into reality. Then there's Commodities Trading, a high-stakes platform where the fluctuating values of goods like gold and oil could mean a significant windfall or a financial setback. It's an environment that requires constant vigilance, as market shifts can occur rapidly and without warning. Don't overlook the fast-paced, adrenaline rush-inducing realm of foreign exchange trading, where fortunes can be made or lost in the blink of an eye, where currencies dance in an intricate ballet of supply and demand, and where being attuned to global trends and events is paramount. And let's not dismiss options trading, a sophisticated investment strategy, where buying options could result in significant gains if the market swings favorably. It provides an exciting opportunity to leverage market trends, and with the right insight and timing, it could yield impressive returns. The final strategy in our comprehensive list is day trading, a high-risk, fast-paced game that demands skill, discipline, and a cast-iron stomach for potential losses. It's a strategy that can quickly turn a profit, but also requires constant monitoring of the market and swift decision-making. While these can be quite lucrative, they are not without risk. High returns are usually the reward for embracing a higher level of risk, and as such, it's essential to do your research before diving in. Thorough research, meticulous planning, and a solid understanding of your risk tolerance are key to navigating the investment landscape. So as we conclude our journey, remember this: the investment world is teeming with opportunities, but it's also fraught with risks. There's no guaranteed way to double your investment in a single year, and anyone who tells you otherwise is likely selling something. In the end, the best investment strategy is one that aligns with your financial goals, your risk tolerance, and your personal circumstances. It's about making informed decisions, staying disciplined, and keeping a long-term perspective. Remember, high reward comes with high risk, so invest wisely and stay informed.